Hello, praising. Sunny, Yash, good evening to all of you students. So, very good evening to all this particular important segment. Prem, very good evening. Students, I would be coming up with the MCQ series of the special classes on the new case studies and the integrated MCQs which are there. Shudadev, good evening. So that I'm going to start on 19th of March, and that timing would be at 10:30 p.m. at night. So that would be 1.5 hour session. So we will be doing it till 31st of March. So all the case study which the ICAI has released in the recent, which I think this a month back, those case studies are what I'm going to target in this particular sessions. So starting from 19th of March, daily at 10:30 p.m. for 1.5 hours, I'm going to have this lecture. Okay, Viyati, good evening. With that now, students, we will now enter into one of the most important topic, and that topic is the trust taxation. So we will be revising this trust taxation with all whatever is the permutation and combinations which are involved so far as the topic is concerned. Trust taxation, students, as you all are aware, that every particular attempt, it has a coverage of 10 marks. Around 8 to 10 marks of practical questions always fall through in this topic, isn't it? So we have this case of a 10 marks question or case study which comes in this particular every examination. I will be dividing this topic, students, into 3 parts. No, there is no such 44 ADA. No, they don't have to forego chapter 6A. Chapter 6A would be available, Shudadev. Would be available. So this is only what you are talking about is only for the alternate tax regime that this is applicable. In the normal provision, it is perfectly fine. So students, in the trust taxation, I am going to divide this particular topic into 3 parts, students. विशाल, पहले तो मैं केस स्टडी डाल रहा हूँ. कंपाइलर लेक्चर्स थोड़े डिफिकल्ट लग रहे हैं क्योंकि अभी ये केस स्टडी 18 तारीख को चालू करना है, क्योंकि ये इसको कंप्लीट करना जरूरी है सबसे पहले. सो विद दिस आई विल बी डूइंग फर्स्ट द केस स्टडी एंड द MCQ सेशन फर्स्ट. सो थोड़ा डिफिकल्ट लग रहा है विशाल कि मैं लेकर आ पाऊँ, बट कोशिश करता हूँ. लेकिन पहला प्रायोरिटी है ये केस स्टडीज एंड द MCQ विच इज़ रिलीज बाय द ICAI विच वी हैव टू कवर इट अप. ओके, सो दैट इज़ वन थिंग दैट वी हैव टू डील विद इट. Okay, Shuddhadev, yeah. So students, in 3 parts I'm going to divide this topic. The first one, students, will be about your registration part. The second one would be the main computational part, the main computation of the total income and the tax, this thing. So total income of the trust, the charitable trust, the way we will be doing it, that is what it will be. And the third one, students, would be the exit tax. The exit tax. Students, this is a topic of a big controversy, students. I'm already doing it, praising anyways, I'm doing it. But still, if you want, I'll just do that. Don't worry. Yeah. Thank you, Shudadev. So, students, this particular topic which has been there, the most important topic is the second one, the computational part. And this is where there is a lot of controversy in the solution of the ICAI. You may have known that, students, there's some controversy in the solutions also which is there in the ICAI. So let me target that computational part first. उसको पहले सबसे consider करते हैं because this is the most grey areas and students somehow or the other find it like they are having a bit of discomfort on the computational part of the trust taxation. So if you see, students, I will do first the computational part. There are multiple issues which are there. And there are certain amendments which has been made in Finance Act 2021 which has an impact on this computational part now. इसकी कुछ amendments हैं which has the impact over this. So therefore we have to be extremely careful about the application now going forward for your May 22 or November 22 examination. So when you do a computational part, the computation of total income, just I'll make a particular formatting so that at least everyone is clear on this one. Computation of total income. Now, so there are some couple of controversy which I can mark straight away for all of you. Couple of controversy, students, I can just tell you straight away. The first is this one. We say income derived from the property held under the trust. Income derived from the property. So that is the first particular format, from the property. Now, this is the point over here. This income comprises of two things. The gross receipt minus the operational expenditure. The income comprises of the two things. One is the gross receipt and second one is the operational expenditure. Okay. So now we actually reduce the operational expenditure from the gross receipt. That is what we do. But in some of the solution, you suddenly find that it is only the gross receipt which is taken. The operational expenditure is considered as the application. The operational expenditure, students, is taken as the application. So the first and foremost thing is this, that under what case we should be considering the operational expenditure as the application of income. So that's the first thing, because some of the solution, if you see, sometimes they do a net off of gross receipt minus operational expenditure. In some of the solution, you say that operational expenditure is considered as an application of an income for which the exemption in section 11 is calculated. So this becomes a huge controversy, and students somehow or the other are not in a position to finally conclude what to be done in the examination. So the point, students, here is this, that so far as the operational expenditures are concerned, operational expenditure, when I talk about it, so let me straight away let you know about this one, students. In which case, so I will give you a note, students. My request to all of you is that also you make a note of this one. Okay, so maybe in the next page or so, the first point which I'm just trying to put across is about the operational expenditure. So, which question you will have to be filed? You will do a net approach. Net approach, that is, what do you mean by net approach? That is to be reduced from gross receipt, and the second one is second approach is the application of income, in which case it will be considered as an application of income. So which question, the operational expenditure, you will reduce it from the gross receipt, then the income derived from the property, then add voluntary contribution, then whatever is the amount, you take the subtotal, and from the subtotal you will do a 15% ad hoc exemption. That is the first approach. Second approach says, no, operational expenditure don't reduce from gross receipt. Take operational expenditure in that application of income for which you claim exemption under section 11. So which question we will do on this one and which question we are going to do with this particular approach, this is the important point. So first of all, application of income. Students, always pay attention to this one now. Students, be very careful in which question you will have to do this as an application of income. I think all of you are also taking a note of it. So the question in which, students, in the question which speaks about two things. One is that there is a disallowance of 40A or 40A3, 40A and 40A3 on the operational expenditure. On the operational expenditure, in those questions, students, take this as the application. On those questions, take this operational expenditure, whatever you have incurred, minus the disallowance portion, then the net amount would be considered as the application of the income. Net amount would be considered as the application of income. This is the presentation. Also, where the question specifically says the expenditure is applied for, this is the word that they are using, applied for the object of the trust. For the object of the trust. So if the question specifically says, the question specifies, the question has specified, and which says that the expenditure is applied for the object of the trust, in that kind of a question also, you will go with what approach, students? The approach would be, after that 15% ad hoc exemption, you give the exemption under section 11 based on the application of income. So that operational expenditure in which the question either says that there is some disallowance of 40 AIA or 40A3. So what you will do, you will then consider the operational expenditure as being applied for the trust object. But the net portion means after taking out the disallowance portion, the net portion is what you will take it as applied for the charitable and religious purpose in India, and accordingly will be exempt under section 11. Is that clear to all of you students? And in the question which says specifically that the operational expenditure is applied for the trust object, in that question also you will take this as an application of income. But where the question does not speaks about this on the operational expenditure, nor it tells that the operational expenditure is applied for the trust object, in those questions, what you will do, you will take the net approach. And what is the net approach? In the net approach, gross receipt minus the expenditure. This net is the income which is derived from the property held in the trust. Then you add the voluntary contribution and then take the 15% ad hoc exemption, and that exactly what will be the treatment. This is the two treatment, students, that you will always keep in mind. Am I clear to all of you on this one? Because this is one of the areas students keeps asking, that in some of the solution of the ICAI they have shown operational expenditure primarily as a net of gross receipt, and in some of the solution of the ICAI we find suddenly that the operational expenditures are considered as the application of income for which exemption under section 11 is available. So where we should do what? This is what exactly you need to do. I hope that this point is very clear to all of you. One more point, students. These are all now examination revision class students. So obviously we will talk only from the examination point of view. One more point, students, I just need to tell you, whichever approach you follow in the examination, please always have the habit of writing a note of the other approach. So if you are taking this net approach, please have the habit of writing the note of this approach also. Whereas if you are taking this as the application of income, please write in the note that there is another approach where instead of taking this as an application of income, we can directly reduce the operational expenditure from the gross receipt, and the net income derived from the property held in the trust would be taken further for the purpose of computation of the income of the trust. Clear with this one, students? You will have to do this. We will say, sir, what if we don't write the note? You will get, the marks will be deducted, students. For this note, at least I know one thing for sure from our student only, who happened to be the examiner of the paper. That is to say that they are giving this note, they are giving marks for this particular note. They are giving a mark for this particular note. And that is the reason why I thought just to bringing it to your notice. So students, I hope that this point is very clear to all of you. So I am taking this approach, gross receipt minus operational expenditure, but I'm repeating that this is not the standard solution. The standard solution will depend upon what kind of question has been targeted in the examination. Are they talking about operational expenditure having an impact of 40A3 or 40IA? Are they talking about operational expenditure is specifically applied for the object of the trust? If this is the kind of a language which are used in the question, then please go ahead and consider the operational expenditure as the application of the income for the object of the trust. Is that clear? Fine. So income derived from the property held under the trust. This is the one point. Held under the trust. Now be careful. The amendment point. See how the amendment impacts your income statement now. How you're going to make the income statement. The second one, students, here is about the voluntary contribution. Be careful on the voluntary contribution, students. This is again going to be there in your examination for sure. And the problem is that students may have understood the amendment, but how to apply it in the examination, they may in fact make some error. So just let's be very clear about the impact of the amendment. Students, up till now, what used to be the case was that voluntary contribution, we used to always exclude in the voluntary contribution the contribution which was meant for the corpus donation. The contribution which was meant for the corpus donation. Students, please be very careful. This is a chapter wherein, unfortunately, or whatever you have to say, we have to have two type of solution. I'll tell you how to read the question. So my focus is that when you are reading the question, what exactly you are going to look into it, the wordings and all, because that is so important to get your solution right. Voluntary contribution, up to prior to this Amendment of Finance Act 2021, our approach was that voluntary contribution, if it was for corpus, simply exclude that corpus donation from the statement. We were never considering that voluntary contribution for corpus. We were completely excluding this from our income. But now going forward for May 22, November 22 attempt and onwards, Corpus, voluntary contribution, which is for Corpus, that will be forming a part of your income. That will be forming a part of your income if you have not deposited that Corpus amount in the mode which is specified, under section 11 subsection 5. Now many students are saying, sir, what is 11.5? 11.5 is the simple word. It is depositing in the government securities. So if you have not deposited the money in the mode specified in provision of section 11.5, the government securities, which is in 11.5, then that voluntary contribution will always be considered as an income. So you will consider this as your income in this context. Now my next question, yes. If the question is only talking about it, how do we read the question then? If the question says that voluntary contribution for Corpus is 5 lakhs, they have not said anything about whether it has been donated or it has not been donated. What would be your approach that would be taken in the examination? Please tell me. Which approach you are going to follow? Will we assume that it has been deposited in the mode specified under section 11.5, or we will assume that it is not deposited in the mode which is specified under 11.5? What would be our approach? Because the question in the examination would be something like this only. The question will say that voluntary contribution for Corpus is, say, 5 lakhs. 5 lakh rupees. My question therefore is that if they only mention you this, if they don't further tell you anything about whether it has been deposited in the mode specified under 11.5 or it has not been deposited, they don't mention anything about that, what exactly you will do now in the examination for this? Students, assume to be deposited. We will assume to be deposited, and this assumption has to be written. You don't write this assumption, gone. Students, 0 mark. I'm telling you, 0 mark. They will not, even though ICAI may also adopt this particular solution. But I'm telling you, you will assume that it is deposited in 11.5. But in case you don't write it as an assumption, take it from me, even though ICAI would have assumed the same thing. But if you don't write the assumption, you will not get the marks. Please be very clear about this part. Is that clear to all of you, students? Fine. So here assumption is must. Assumption is must, students. Assumption is must if the question is silent. If the question is silent about what? Silent about whether the corpus amount is donated in 11.5 mode or not. So each aspect of our computation, I'm giving my explanation on that. So whatever impacts to your computation of your income for the trust, I'm giving all what is required to be done for examination purpose. Okay. So each and every items we are going to discuss in this way. Okay. I hope that all of you are clear with this one. So voluntary contribution for corpus, this is assumption that you will make it. Assumption is must if the question is silent about whether the corpus amount is donated in 11.5 mode or not. I hope that every one of you are clear with this one. If that is the case, I'm going to the next one. Students, the next one is about the capital gains. Okay, now just if you permit, I'll discuss this amendment with all of you. If you all are permitting, then I will discuss with you this amendment also. Let me quickly discuss this one. Since I'm there in the corpus part, I'll just discuss with you amendment. Suppose, English students, the question is there in the examination. Now let's play devil's advocate, because we don't know what kind of question will be there in the exam. Supposingly, the chances are very high that they will specify that the voluntary contribution is not for the voluntary contribution is for the corpus, and it is not deposited in the mode which is specified under 11.5. It is not deposited in the mode specified under 11.5. So will you consider this as your income? Answer is yes, because then the exclusion is not applicable. That will be forming a part of the income. Point number 2. Whether any application which is made, students, which has been made, be careful now. any application which is being made from this voluntary contribution for the corpus towards the charitable and religious purpose in India, can that be considered as a deemed application or not? Can that be considered as a deemed application or not? Any application that you will make from this particular voluntary contribution meant towards the corpus, can you consider this? Can you consider this as an eligible application? Answer is no. Answer is no, students. So there is a trick, no praising. Deepak, the answer is no. Be careful. This is the amendment. The amendment says very clearly, if a voluntary contribution meant for corpus has not been deposited in the mode specified under section 11.5, then the first point is that consider this as an income. But once it is considered as an income, also you should ensure that that particular corpus amount, if it is applied for charitable or religious purpose in India, then it will not be considered as an eligible application. So please don't give the effect of exemption under section 11 from that voluntary contribution which is for the corpus purpose, on which the 11.5 mode investment has not been done. Clear with all of you students in this case? So in this context, students, just keep this particular point in mind, that voluntary contribution for the corpus will be considered as an income if that corpus amount is not deposited in the mode specified under 11.5. At the same time, if from that corpus amount any expenditure has been incurred towards the trust object, then the same shall not be considered. Then the same shall not be considered as an eligible application for the purpose of exemption. As an eligible application for the purpose of exemption. I hope that now this point is well clear to all of you. Coming to the next point, students, is about the next particular point, students, is about the capital gains. Now, capital gains primarily, you will put the capital gains amount over here. So computation would be done normally. So you will write here computation on capital gains to be done normally. So there is no such specific computation that is required. Just think normally, okay, whatever the way I am calculating the capital gains, I'll just keep the capital gains like this only. The point that will come in would be about the exemption. We will see one specific exemption of 11.1a on the capital gains front, but a bit later. But right now I'm just preparing my income statement. I'll talk about the exemption on the capital gains a bit later. So capital gains, please do the computation normally. Okay, there is absolutely no worry about it. The way we calculate the capital gains, the same way we will be calculating based on the data available. But hold on, no exemption of 11.1a effect to be given here right now. That 11.1a exemption effect will be given after that 15% ad hoc exemption that we give. But after that, only we will give it. Next one is about the portion of the anonymous donation which is considered as the normal income. Which is the next one? The portion of the anonymous donation. Portion of the anonymous donation. AD is the anonymous donation considered as what? Considered as normal income. Now, how much portion is considered as a normal income? Just like normal income, students. Portion of the anonymous donation. How much portion is considered as a normal income? It is higher of 5% of the total donation, or rupees 1 lakh, whichever is higher. 5% of the total donation or rupees 1 lakh, whichever is higher. Now be careful, here also people make a mistake. 5% of total donation or rupees 1 lakh, whichever is higher. Now what will come under this total donation, students? What will come under the total donation? Let me ask you the question. Obviously in total donation, full anonymous donation will come. In the total donation, full anonymous donation will come. Do you all agree to this one? In the total donation, what will be there? So let me in fact give you the bifurcation here. In the total donation will be full anonymous donation, full AD. In the total donation also there would be what, students? There would be your voluntary contribution. Okay, and in this one there would also be voluntary contribution for corpus. All you will to add up, and of all, whatever you have added, take 5%. That 5% will then be compared with rupees 1 lakh. Higher of the two is what will be considered as a normal income in that portion of the anonymous donation. And only the net anonymous donation will be taken in the last step. When we compute the total income, the net anonymous donation will be taken in the last step when we compute our total income. Last step, students. See how far my hand is going. isn't it? That is where you need to put. How far my hand is going, can you see that? Okay, sir, your finger cannot be seen. Okay, now you can see. That is the place where you need to keep that net portion. I hope that you have got hold with this one now. Through the action speaks louder than word, isn't it? We have heard this kind of a statement right from our childhood days. I think this is the time to redeem ourselves. So with that now, students, you will take across this particular part, the total. So therefore the total in fact, students, this is what you will take this is a subtotal, take the subtotal, and from this subtotal you will do 15% ad hoc exemption. 15% ad hoc exemption primarily. Now 15% ad hoc exemption you will give it of this subtotal. Now there is one point which I just wanted to remind to all of you, because again on this particular point, a lot of mistakes, there could be a chance of a mistake. Students, this 15% of the ad hoc exemption that we are talking about it. Before that, 15% ad hoc exemption that you're talking about it, students. Students, in this 15% ad hoc exemption, primarily, this actually is ad hocly allowed. Means on this 15% there is no like compulsion that you have to apply this 15% portion in the same year. No, you can apply it at any year whenever you wish to do it. Absolutely, it's up to you. So whenever you want to make an application from this 15%, you can do that application. But only one condition has to be satisfied. Are you aware of that condition? The condition is that till the time the application is made, that money also needs to be deposited in the mode which is specified under 11.5, which is again the government securities. So again the same thing will happen. If in the question that is there in the examination, if they give you to specifically that the assessee has not invested any amount in the mode specified under 11.5, so you can assume safely that they are attacking on that 15%. You can assume safely that they are attacking on 15%, because that 15% ad hoc exemption does not requires that the assessee should make an immediate application of the amount towards the charitable or religious purpose in India. That 15% of the amount can be applied in any year only with one condition, and that condition happens to be that the money should be then deposited till the time the application is done. The money should be deposited in the mode which is specified under section 11 subsection 5. Is that point clear to all of you, students? Like the video, and if you are clear, students, then you need to like the video only. Then I will come to know that you people are all clear with this one. Fine, students. So I hope that every one of you, if there is a specific reference in the question of your examination that the assessee has not invested in the year in the mode specified under section 11.5, indirectly they are giving you the hint. That please don't take that 15% ad hoc exemption, since the question specifically says that the assessee has not invested anything in the 11.5 investment. Is that clear to all of you? But if the question is silent, obviously, if the question is silent, we all know what to do. We have to assume that the assessee would have done the needful job. And what is the job, students, that the assessee would have done? Assessee would have invested in the mode specified under 11.5. Then we need not unnecessarily be very negative about it. Okay. Now before I now go to the application part, I'll go to the application part one by one. But before I do that, I just need to clear on one last point. In the income, students, in this income, what about the business income? If there is a business income, then students, can you tell me what kind of approach that you people will try to have it on business income? Because in one of the question they have given you something about business income. So if they also give you the data about business income, then I just need to understand what is the approach that you will have it in your examination. Please tell me, students, quickly. We will go to the application now, but before that I just need to get this particular business income concept sorted out with all of you. I will make a small note on this one because this was targeted in the examination practical question. So therefore, the need of understanding what should be done so far as the business income, if they give you that the business income of the trust is rupees, say 10 lakhs. If this is the information which has been given to you, then my humble suggestion to all of you is that what is the treatment that you are going to give on that particular business income. Quickly students, 10 seconds only I am giving it to all of you to reply to this query. Prem, quickly. On business income, I'm asking students. On business income, students. Quickly, students. Come forward and answer this. Students, last 5 seconds now. So, students, now on the business income. Be very careful about this. ICAI is master in spinning the questions in trust taxation. You people also are aware of it, how they have done the spinning job. Primarily, they are master of spinning this one, students, on business income. So, a business income, students, if it is there, you have to read the question carefully on the business income treatment. Business income of trust. This is what you will have to look into it. Students, check the question. Is that particular trust in the question? Do check this question very carefully. What is the question? Check the question. And what do you need to check in that question? The trust object. The trust object. If the trust object falls under the general public utility, are you aware of it, students? General public utility. Or the trust object, students, is the other specific cases. Other specific cases in the definition of charitable purpose. You remember the definition of charitable purpose? In the definition of charitable purpose, CP, under section 215, like relief to poor, medical relief, etc., etc. Medical relief, then yoga, environment, isn't it? All those things are there. So I'm just writing etc. So these are specific cases. When it is for general public utility question which has been there, so be careful. Here you need to check. Check what? Whether the business receipt exceed 20% of the total receipt. Because if it does, then in that case, in this question, the trust will lose it will never be considered as charitable purpose. And if it is never considered as charitable purpose, that all that section 11 exemption that we are talking about it, all this will go, it will fizzle out. So not a charitable purpose. So if that happens, then not a charitable purpose, students. Not a charitable purpose, no exemption. No exemption of 11. No exemption of 11. And where it is about this, because in that question of the ICAI, see how smart these people are. In that question of the ICAI, which I have seen, that question was for the medical and the college, hospital. The college was there. Hospital as well as the college was mentioned there. So the college and the hospital was being mentioned. And if it is about the college and the hospital, then students, it does not fall under the general public utility. It will fall under this category. And where it falls in this category, students, then the business income, if incidental to the trust object, will be considered as any other income. Of the trust, and the exemption will be available on application. So just be very careful about only this part, students. So what I've made a reference here. If it is a trust, just read the question carefully. Don't blindly. In fact, that's a problem of the trust taxation question. Students really do a blind job. So here you should be careful. Write the first line carefully. What is a trust object? Is it for general public utility, or it is falling in that specific category? In the specific category like college, hospitals, etc., etc. Then in that particular case, we will say that the business income, if it is incidental to the trust object, will be considered as any other income of the trust, and it will also be eligible for exemption under section 11 provided it does the application towards the charitable religious purpose in India. Is that clear to all of you students now? So this is precisely what you have to be very careful about reading the question. I have told you earlier also, I am repeating this again, students. This trust taxation has each element. It can really bother the students and like anything. By the way, this 15% ad hoc exemption that you are giving it under section 11, by the way. Now, what about the remaining income, students? The remaining income which has been given to you, herein the remaining income, students, that has been given to you, these remaining income will be eligible for the exemption, no doubt about that. Okay, so therefore, herein, less exemption on the application. Now, there are some very important points on the application or deemed application, exemption under section 11 on the application or deemed application. Now, we have to discuss this particular part very carefully. Again, there are some very important amendments which are being made over here. Exemption under section 11 on the application or deemed application, students. So, generally, I will in fact will give you 2 or 3 specific pointers. Number 1 is about, students, if I'm acquiring a particular asset, primarily, fine. If I'm acquiring a particular asset, will that be eligible for the purpose of exemption under section 11? I think all of you can say answer to be yes. There is absolutely no doubt about that. The income, if I am applying to acquire the asset of the trust, then yes, it will be eligible for the exemption, no doubt about that. But here there is a word of caution, and the word of caution is that once you claim an exemption in respect of the asset under section 11, subsequently the depreciation allowance on that asset cannot be claimed as a deduction while arriving at the income derived from the property held under the trust. So once you claim an exemption in respect of acquisition of an asset under section 11, then subsequently any depreciation allowance on that particular asset will not be eligible for deduction in computing the income which is derived from the property held under the trust. Is that clear to all of you students? That is one approach that you should always keep in mind. Fine, that is perfect, students. Now let's look upon, so therefore I have said about the asset acquisition. Fine, asset acquisition, that is an eligible application. How about, now let me talk about the amendment. How about, students, if I am taking a loan for acquiring the asset, maybe I may not have the sufficient income, but I want to take a loan to do the eligible application. So if I am taking a loan, students, be very careful. On that loan amount, they have said that, on the loan amount, students, they have said that if you are doing any particular application of the income towards the charitable religious purpose in India, then that particular application will not qualify for exemption under section 11. How subtle it is, how deep it is. Again, I am repeating this part. You have taken a loan. From that loan, you are doing the application for charitable religious purpose in India. So the Amendment of Finance Act 2021 says that from the loan, if you have done any application towards the charitable religious purpose in India, you will not be getting any exemption at that particular point of time. No exemption will be given to you on the loan amount. So no exemption, primarily, no exemption on application towards charity. I will just write here towards charity from loan amount. Towards charity from loan amount. Is that clear to all of you? No exemption on application towards charity from loan amount. Be very clear about these are the amendments of Finance Act 2021. However, students, if subsequently I am repaying the loan, on the repayment of the loan amount, will that be considered as an eligible application for the purpose of exemption? Answer is yes. So, on subsequent repayment of loan amount, students. Yes, present. Subsequent repayment of loan amount. Loan amount will be considered as what? As an eligible application. Eligible application for exemption. Are you clear about this one? These are the important points which I am discussing with all of you. Now comes another amendment. See, this is the practical part of it. How you have to write your answers in the examination. Now let's take across another angle. Be careful, students. Again, I am telling you, be careful means in trust taxation, I really mean it when I say be careful. Otherwise, you could relax. But in trust taxation, you cannot relax. So coming on this particular point number 4. Up till last year, in fact, there were questions which was there in the last year papers, where if there was any excess application, in the earlier years, which was not fully exempted because of shortfall of income. If there was any excess application in the earlier years, which was not fully exempted because of the shortfall of the income of the earlier year, then the same excess application was being allowed as an eligible exemption, as an eligible for exemption purpose under section 11 in the current year. That is what we have discussed in the last year particular papers and all. But going forward from May 22 attempt, November 22 attempt and onwards, for which I find a very strong possibility of the question in the examination, and going forward it would be that any information about the excess application that may have been done in the earlier years will not be considered as an eligible application for the purpose of exemption in the current year. So therefore, please write over here excess application in the earlier years shall not be eligible for exemption in the current year, in the current year's income. This is your amendment of Finance Act 2021. I hope that this point is also well taken by all of you. Excess application in the earlier year shall not be eligible for exemption in the current year's income. Finance Act 2021. So this would be nil. You will write nil as per the amendment of FA 2021. So this is what it is now, students. We have dealt with this one. Now I'll also talk about some typical case of the donation here. If I'm giving a donation to another trust, students, you can put across your dot, Deepak, not an issue. So if I give a donation to the another trust, that donation to the another trust will be considered as an eligible application. I think all of you will agree to this. It's deemed to be an eligible application. So donation to another trust, another registered trust, I will say. Registered is very important. Registered trust, eligible for exemption. Okay. Now in this case, students, what is irrelevant and what is relevant to be considered herein? So that herein you can say that the recipient trust may not have the same object. That is perfectly fine. May not have some same object. What is important? It should be the registered trust. May not have same object. But what is important, students, in this kind of a donation question is that the donation should not be for the corpus purpose. The donation should not be for what? Should not be for the corpus. Should not be for corpus donation. If it is for corpus donation, students, then what is that we will say? Not an eligible application. If it is a corpus donation, students, then we will say it will not be considered as an eligible application. Do you all get this one or not? Students, are you all clear with this one? Perfect. Now the next particular point, students, is this that, students, is it necessary that I should actually spend this particular amount? Actual spending of the amount, is it the criteria for the purpose of exemption? If there is a commitment, to incur a particular expenditure, so will that also be sufficient enough for me to take the exemption? To that the answer is yes. So if the trust has set apart, be careful, they have asked this question in the examination and student thought this is an accumulation part. It wasn't an accumulation part. If this accumulation option they are taking, then the ICAI will give you the specific word of accumulation. But if they are only using the word, they are setting it apart for doing this particular expenditure without the reference of the word accumulation. So please don't start thinking the accumulation option. If the word is used as set apart, not the accumulation, then you don't start dreaming about the accumulation option, which I think all of you are aware of it, that 5 years period of accumulation is available. That I will quickly revise that particular point with all of you. Yes, it is covered, Deepak, it is covered in 1023C. So therefore, the amount set apart for an eligible application, will qualify for exemption. And what is that you will write in the bracket? This is not the accumulation option. Be careful, the word that they will use in the examination will be set apart. And this word set apart should be distinguished with another word, accumulation, because that accumulation is the option that he has to exercise by following some procedures. But if he is setting it apart for an eligible application, then that is sufficient for him to get the exemption under section 11. The actual spending may not be required. I hope that all of you are clear with this one. Any doubt, students, on this, please do ask me. I'm just assuming that so far it is so good. Okay, so this is all about point number 6, which has been there in our discussion. Now I go with the accumulation as an option, students. Since this set apart has been done, so I will put the 7th point as an accumulation. Accumulation option, students. If they take the accumulation option, so please be very careful about this. See, these people are so, what to say, in trust taxation only these nice particular feelings are coming for the one who is setting the paper. In this trust questions only the nice feelings are coming, students. So what is the situation, students, in the case of accumulation? Students, we know that accumulation option you can do it, for which you need to make an application to the assessing officer in the relevant form, and on that basis they will be eligible for the exemption on that option of accumulation. For that accumulation, they need to specify the object for which they are accumulating this amount. Now be careful, students. The maximum period of accumulation is 5 years, and this is what these people have done it. Students got confused. 5 years counting has to be done in which way? The current year, students, the year in which the income is earned is also to be considered as a year of accumulation. Please take a note of this. The year in which you have earned the income is also the year which we will consider as the year of accumulation. So therefore, that year of income plus 4 more years. Why I am making so much of an emphasis on this part? For the reason is very clear that the emphasis, students, I am making on this particular part because you all are aware of it now, students. The emphasis is because on the 6th year, it will result into a deemed income if there is a shortfall in the application. If there is a shortfall in the application, then in the 6th year, it will result into a deemed income. So, which is the 6th year? Again, I am repeating. The 5 years is the accumulation period, and the year in which you have earned the income is also the year in which you need to count this as your income for, you will have to count this also as a year of accumulation. So, in one of the examination of the ICAI, which is there in our compiler also, we have found that the ICAI is asked some 2016-2017. And students, the point was this, that the current year, actually the current year happened to be not the current year, students, happened, whatever it be. Now, current year happened to be, say, for example, 5th year. So, if the current year is the 5th year, then obviously please don't tax it in this current year. The taxability of the shortfall of the application will happen in the next year, not in the current year. This was the examination question. So, therefore, the counting is very critical then when you have to do the counting. So, when you do the counting, the year in which the trust would have earned the income, that is also the year of application, and 4 more years. Okay. So, in that question which was I have seen in the compiler, in that question, the current year happened to be the 5th year. So, please don't tax anything. The income will be nil of that, the shortfall income will be nil, and you will only say that this shortfall amount will not be taxed in the current year, it will be taxed in the next year. Is that clear to all of you on the accumulation front? So, this is what these people have done it, and that exactly it is the case. Students, scientifically it is proven that whatever lectures that you attend at 11:30 p.m. at night, all that get registered forever. This is scientific, students, scientific proof. So, you'll ask, sir, who is the scientist? The scientist is me, students. Will not say congratulations for that. So, 11:30, whatever you listen in the lecture, everything gets registered in your mind. Okay, so that is the case. Sometimes it can get registered in such a way that you can get very close to ATU deduction also. Sometimes that is the kind of the understanding that happens. Okay, I'll take one quick query, students, and then thereafter I will proceed further. In case income is applied for constructing building which is owned by trust and claimed as application, but we don't get any income out of it. There is no, see, this nexus is not required to be established. That the trust primarily, if I have done the application of this one, for the property should be of the trust. Whether the property fetches the income or not, whether the property fetches the income or not has got no relevance. What is important is that the property for which you are spending the money should be the trust property. That will be considered as the eligible income. Whether that property finally will fetch you the income is not the criteria for the purpose of deciding whether expenditure which I am incurring for construction of that property, will it be eligible for exemption or not. So, therefore, that is something is an irrelevant particular criteria. Whether that property will be fetching me the income or not is an irrelevant criteria for the exemption. What is the relevant criteria? The relevant criteria is that the property which you are constructing should be held under the trust. If that is the case, exemption definitely would be available. I hope that all of you are clear with this one. Fair enough, students, fair enough. With that spirit in mind of 11:30 p.m. and at ATU as well, let's proceed further then. Okay, one point on accumulation. Students, what if, be careful, 2 questions, students, 2 questions. No, depreciation, if you have claimed an exemption, where is the question of claiming a depreciation out of that? If you have claimed an exemption. So, the criteria which has been there, be careful of this one. 2 questions, quick 2 questions, students. Supposingly, this was one case study which the ICAI has asked in May 16. May 16 attempt, students, the ICAI have asked one case study. Very tricky case study, students got confused on that. The case study was that trust has chosen an option for accumulation for that 5 years period. So, they have specified the option for which they want to do the application. However, they realized later on in that period of 5 years that they could not pursue that particular option. In fact, for application, instead they now want to students, they now want to put that money accumulated for the other object of the trust. For the other object of the trust. question therefore was whether it will be considered as a default. Whether it will be considered as a default. So the question again I am repeating. The trust has accumulated the money for option X. However, as it went forward, it realized that it doesn't want to apply the income for option X, but the money accumulated, it wanted to apply for the other object of the trust. Whether this application, will it be considered to be a default, or it will be considered as perfectly applied for the purpose of the trust? What you will say this for this option? Will it be considered as a default case? And to that the answer, students, is no. It will not be considered as a default. It will not be considered as a default. So if the money has been accumulated for a particular purpose, however, the money actually got applied for some other object of the trust. Other object of the trust. That is equally important. I am emphasizing on this part. Other object of the trust, Deepak, it will not be considered as a default. This was the examination question. So therefore, there is a bit of flexibility which has been given to the trust that okay, you have thought of accumulation primarily, but then there is no hard and fast rule that if you cannot do that particular application for which you have made the accumulation, it will not be considered as a default. You can definitely use this particular income for some other object of the trust, and still there will not be any consequence of deemed income or any consequence of default. Fine. However, one thing would be a default. One thing will be a default. And what is the default? If you have taken the option of accumulation. If you have taken the option of accumulation, but instead of applying it for the object, you later on decide to donate to the another trust. You would later on decide to donate it to the another trust. Students, in that particular case, it will be considered as a default. It will be considered as a default. In which very case, that money which has been applied for giving donation to another trust will be considered as deemed income. I hope that all of you are clear with this one now. On the accumulation option. So accumulation option, student, this is the case. Period is 5 years maximum. And 5 years, what I told you is that please consider the current year also. In that 5 years, please do consider the current year in which the income has been earned as the accumulation part. So students, you can just try to take a checklist of this particular part so that at least this is there in your notes, so that later on at least it stays with you. So the important point which I have done is that the period of accumulation is 5 years. 5 years, which includes what? Includes the year in which the income is earned. The year in which the income is earned. So that is point number 1. The year for which the income is earned. Fine, students. So period is 5 years, which will include the year in which the income is earned. That is the point. The second one, students, which has been there in this context. The other one is that in this situation, the money should be kept in 11.5 mode. What is 11.5 mode? The government securities. 11.5 mode is government securities. So can I conclude that 11.5 students, 11.5 mode, which is there, can I conclude in this case? With 6 point. 6 point is which one? Set apart. Set apart, if they use the word set apart, then it should not be considered as a accumulation. It will be considered as a eligible application. So the word set apart, if it is there in the question in the examination, so it is as good as the application. That is what I have said on the set apart part. Now 11.5, 3 places 11.5 now has been used. Which are the 3 places now? Let's conclude 11.5 mode. The 3 places are, number 1, the voluntary contribution for corpus. That should also be deposited in the mode specified under section 11.5. The voluntary contribution towards the corpus, that should be specified in the mode, that should be deposited in the mode specified under 11.5. The second one, students, is the 15% ad hoc exemption. The 15% ad hoc exemption, that should also be deposited that should also be deposited in that mode specified under 11.5. And the last but not the least, that 11.5 is on the accumulation option. Accumulation option. The 11.5 is the accumulation option. 3 places 11.5 is used, wherein the money needs to be deposited in the mode which is specified under 11.5. Okay, Ramakrishna? Thank you. So this is what it is. So 11.5 mode, students, is in respect of this particular part. I hope that every one of you are clear about this particular proposition. So 11.5 has been used in 3 places, students. Did you all got this one? Now, students, by the way, I will be giving the link of the special class in this video. The special class, which is a free class, the special class, which is of the, you remember that one? Which special class I'm talking about it? The case study and the MCQ part. You can find the link in this video. You will say, sir, we cannot see any video. Tomorrow you can find it. Tomorrow you can find it, the link of it. I'll tell the team to put the link in this description box. The description of this video, you will get it. Now, students, accumulation. So, period of 5 years. The money should be kept in 11.5 mode. And the other part, special point is that, yeah, 19, Deepak. The other particular part, students, is that, in this context, the other particular part which has been there in this context is this. Be careful, students. In this situation, please take a note of it. The money accumulated could be applied for any other object of the trust. Keep this point in mind. Money accumulated could be applied for any other object of the trust. And the next particular part, students, the next particular part, the last particular one is that, however, donation to another trust is prohibited. Donation to another trust is prohibited. Students, just this period of accumulation is 5 years. Shortfall in application. Shortfall in application is taxable in 6th year. Shortfall in application is taxable in 6th year. I hope that every one of you are clear with this accumulation option now. If you all are clear with the accumulation option, I will be going forward now. Any doubt, students, on here, please do let me know on this. Otherwise, I'm proceeding it further. I'm proceeding it further, students, now. So this is just an irony, no, students? It's just like an irony. If in the current year, if I've got the income, and if in the current year, if I want to do donation to the another trust, is it considered to be an eligible application? Yes, it is considered as an eligible application, provided the donation is not towards the corpus. That's the only condition. However, if I'm choosing the option of accumulation, then in that particular case, students, the donation option is ruled out then. Then somewhere towards the end of that accumulation period, if you think now to donate it to another trust, then that will be considered as a default, which will result into a deemed income. I think that this point is now well clear to all of you. No doubt about this one now. Now, I should not be telling you this. Every one of you are aware that in respect of any application of an amount, if there is a default of 40IA or if there is a default of 40A3, then that much portion will not be considered as an eligible application and only the net amount will qualify for exemption under section 11. I think that point every one of you are clear. If on the application there is a default of 40AIA, which is the TDS when the payee is a resident, or there is a default of 40A3, then that portion of default will not be eligible for exemption, and only the net amount is what will qualify for exemption under section 11. Is that clear to all of you? If that is the case, students, I now take up those typical case of, okay, now the other particular part, students. Other particular part. If you allow me, students, I just forgot one thing. If you allow me to go up. Here. Students, here in this case, if you know exempt income other than section 10.1, exempt income other than section 10.1, this I forgot. This exempt income other than section 10.1 will be considered as the normal income, which means that so far as the exempt income is concerned, other than section 10.1, their exemption will be governed by the provision of section 11, which means that such amount which are otherwise exempt under section 10, those amount will be eligible for exemption only if they are applied towards the charitable religious purpose in India. Again, I am repeating this point. If there is an exempt income other than the exemption of 10.1, then those particular exempt income will be eligible for exemption only if they are applied towards charitable religious purpose in India. Which means this, that the exemption of section 11 overrides the exemption of section 10 for all the cases except one. And what is that except one? 10.1 exemption. If it is an agricultural income, then clearly it is exempt. Don't consider this at all in the statement. Directly in the note you will write. But if it is any other exemption under section 10, then one thing is there, students, that the 11 overrides all the other exemption of 10, which means that their those incomes will be eligible for exemption only if they are being applied towards a charitable religious purpose in India. So that's only one point which I wanted to insert in. And let's now come to the other particular typical cases which are being there in this context. The typical cases which are being there in this particular context, students. The typical particular cases which are being there in this particular context. Let me take you towards that particular point. Capital gains. Now, how do I work out from the capital gains front, students? See, the capital gains in this context. Say you do capital gains here in net, just take it this one. Net sale consideration, students, is say 22 lakhs. I'll just give you a figure because this is where people also go wrong. Net sale consideration, students, is say 22 lakhs. Against that, students, say cost of acquisition is say 10 lakhs. How much is the capital gains? 12 lakhs is the capital gains. This is the capital gains which you want to exempt it. Fine, you will be in a position to exempt it. Now, you will also be given in the question, in the examination question, they will be giving you that the net sale consideration, NSC is the net sale consideration that you have invested in the new asset. In the new asset, they will give you like this information, students. In the new asset, I'll give you three options. Option number 1 is 22 lakhs. Option number 2 is say 20 lakhs. And option number 3 is say 25 lakhs. They will give you three options. The net sale consideration arising on this capital gain amount has been invested in the new asset, in which there are three cases which would be given to you. One is 22 lakhs, full net sale consideration is invested. Second is 20 lakhs, only a part of the net sale consideration is invested. The third one is 25 lakhs, in which very case, over and above the net sale consideration is invested. Over and above the net sale consideration is invested. What will be the treatment in this case? So here, students, there is a 11(1)(a) exemption. So if you choose to use the net sale consideration arising on transfer of a capital asset of the trust, then if you choose to use this particular net sale consideration to acquire a new asset of the trust, then in that case, the capital gains exemption will depend upon how much of the net sale consideration has been invested in acquiring the new asset of the trust. How much of the net sale consideration has been invested in the new asset of the trust. This is the correlation. So therefore, again, in the first case, since you have applied full net sale consideration, so in the first case, students, entire 12 lakhs will be eligible for exemption. The entire 12 lakhs will be eligible for exemption under section 11(1)(a). Entire 12 lakhs, students. Okay, because you have invested full net sale consideration. But where there is a shortfall, in making the application of the net sale consideration in acquiring the new asset, then the capital gains that will be eligible for exemption under 11(1)(a) will be revised like this. How you will revise it, friends? Do you know how do you revise it? This is what would be the capital gains. So you will try to calculate the capital gains eligible for exemption by substituting what? By substituting the net sale consideration with the amount that you have invested in the new asset. So how much is the amount that you have invested in the new asset? 20 lakhs. So against that, the amount invested is 20 lakhs. 10 lakhs was the cost anyway. So how much is the capital gains now which you have got for exemption purpose? The capital gains now that you have got for exemption purpose is 10 lakhs. So in the second case, students, it is 10 lakhs which will be eligible for exemption. The second case, it is at 10 lakhs that will be eligible for exemption. So what happens here is that, students, when there is a shortfall in the application of the net sale consideration in acquiring the new asset, then in that case, you try to revise your capital gains calculation. How do you revise it? Please substitute the net sale consideration with the amount invested and get that revised capital gains which will qualify for exemption under 11(1)(a), and this is how you do. So accordingly, students, it is 10 lakhs that will be eligible for exemption in this context under 11(1)(a). And coming to the last point, students, which is point number C. Now here at least we can say full 12 lakhs will be exempt under 11(1)(a), because the entire net sale consideration has been invested in the acquiring of the new asset. So full 12 lakhs will be eligible for exemption under 11(1)(a). Answer is yes. However, here, students, you will find that there is an extra 3 lakhs that you have invested in the new asset. So that extra 3 lakhs in this case, which you have invested in this case will qualify for exemption under section 11(1), the normal exemption. So that 3 lakhs extra that has been invested in this particular case, that will be eligible for exemption under 11(1). Is that clear to all of you, students? All of you are clear with this one now? I hope that every one of you are clear in this particular context. Let me see if there are any issue which I am missing out on. If not, then I will. Perfect. So this is what it would be, students. And once you have done with this, you'll take the total of this one. You will get the net amount. And then thereafter, students, you will add with this one the anonymous donation, which is the net amount. Anonymous donation, which is the net amount. Net amount means because that some portion is considered as a normal income. And this is what will be getting your total income. Now, sometimes what these people do is that, students, sometimes they call you to calculate a tax liability. So when they call you to calculate a tax liability, students, always keep in mind, when they will call you to calculate tax liability, then in this particular context, when they call you to calculate tax liability, then this portion would be under 115 BBC, the net portion of this one, at 30%. And thereafter, students, the balance amount. The balance is the total income minus this, the net AD, this would be at slab rate. Slab rate of individual. Slab rate of individual. Is that clear to all of you, students? Fine. So this covers your entire thing, students, of this computational part, which we have discussed it today. Now, on the next Saturday's lecture, which we will have in the evening, you'll say, sir, what is the time in the evening? Saturday, 6 o'clock. I could not take this Sunday. That's the reason why I have to do this additional lecture. Surcharge threshold prem would be the same, 1 crore above in this context. Now, sorry, 50 lakhs above. That 50 lakhs above, 50 to this thing, 1 lakh. Sorry, 50 lakhs to 1 lakh, 1 crore, it is 10%. 1 crore above to 2 crores, it is 15%, so on and so forth. So that is how the surcharge would be done in this case. Ramkrishna, my lectures first, you will find the MCQ. You will find, again I'm repeating, students, the MCQ part which is there, the case study, 19th I'm doing it. The link of which will be given in the description box of this video only. But that link I'll put it tomorrow. So tomorrow if you check this video, you will get the link of that MCQ in this particular description box. Fine. Every Saturday and Sunday, students, we are meeting for our revision lectures. So that always remain the same. So this Saturday also, I'm going to meet you at 6 p.m. to continue with this particular lecture. But before then, at night, I'm going to meet you for the MCQs and all. So this Saturday also we are meeting here at 6 o'clock to continue the balance portion of the trust taxation. And on that night only itself, we'll be dealing with that. 1023C, there are some amendments and all I'm going to touch upon in the next session. Next session will be exit tax, the 1023C, and on the registration front. So that will be my agenda on the next particular class. Okay, and last hearing, students, so Saturday I'm going to do this. The case law part that you people are asking, yes, that is, I'm aware of the case law front. So we'll be doing the case law, but that case law I'm going to do with all of you on 1st of April. So on the 1st of April, students, I'm doing a case law session of 2 hours primarily. In 2 hours, all the case law will be finished. You'll say, sir, how that will happen? We are getting tensed up. How you'll finish in 2 hours? That is my job. So I'll do that. Don't worry about that. Okay. So that would be taken care of, students. Don't worry on the case law front. So therefore, let's do it in that particular way. Is that clear to all of you, students? So this is what it is. So today, just revise this thing. I will also put some more examination, these case study, the way I have done it today. Some more on the trust taxation based on the examination questions which has been targeted. So those would be repeated in the next session as well. So just be ready with this one. Just very quick announcement, students, about our Yodha batches which is going on. That PDF file, any case, would be available. Don't worry. That I'll also put it in a Telegram channel. Don't worry about that. So, students, Yodha batches, which has been there on 9th of March, it already started. Though this is a batch in Hindi, but there is also a batch in English also. Although right now I'm speaking about a batch in Hindi, but right now there is a batch in English also. One point, students, just please pay attention to this one. There is a 20% discount scheme which is going on right now. So any one of your friends or anyone who wants to take, say for example, crash course, tell them to do it by tomorrow. Tomorrow would be the last date, and tell them that use this code CADS. The code is CADS while taking the subscription. So they can take, say for example, 3-month subscription, or any students who are opting for November attempt, they can take also 6-month subscription if they want to do a regular batch. In English also, we have got regular batch on English as well. So where I'm taking DT and other faculties are taking other subjects as well. So if they can do it tomorrow, subscription, then they get 20% discount. Tomorrow is the last day for 20%. Just remind your friends that the code that they have to use is CADS. So for May 22, they can opt for a crash course or a fast track, which is there for 3-month subscription they can do. For November 22, they can go for this. For November 22, they can go for 6 months particular subscription. Again, please tell them to use this code CADS. The subscription is for the full group. So the best part would be that they would be in a position to do the entire particular group in that particular amount. So that is a part which you can just share with them. But tomorrow, as I told you, students, last day for 20% discount. which is there only till tomorrow. So they need to, tomorrow, that is 16th of March. The benefit of this platform would be, students, live lectures are there as it is going on. Thereafter, unlimited recorded lectures are also, they can see all recorded lectures also. So during the subscription period, unlimited recorded sessions. Multiple educators are there. Doubt solving session, practice of the mock test series are there. These are our star performer students up till now. I was privileged to mentor AIR1, Bishal, Asik Raj, Mohammad Shabib, Rohit Chipper and all these. I was privileged, as I'm privileged to serve to all of you students. So no denying on this particular fact as well. Subscription plan, students, this is what it is. Starting from 3 months to, it can go to 36 months. But as I told you, anyone who is aiming for May 22, they can go for this crash course. So 3 month subscription is enough for them. Then, but please, if you apply this code CADS, so this on 8,500, they get 20% discount on this 8,500. Similarly, those who are opting for 6 month subscription, then on this 12,500, they get 20% discount. So roughly their discount would be around 2,500 or so. So they can do entire group 2 in that sum amount. Iconic is another program which is there in Unacademy with some added features. The features includes these things which are being there. So Iconic is our added particular program, a flagship program of the Unacademy. So this is what I was talking about it, students. This unlock that tomorrow is our last day. So therefore, tell them to take up the subscription without fail. And the code I have told you is CADS, is the referral code that they will, at the time of payment, there will be a referral code. Tell them to put this code CADS so as to get this 20% discount. Okay, students? I'll see you now, students. You can mention it, you can mail it. In fact, there will be a mail ID that will be there in the capsule book. Some of the errors have been taken into account. That will be reprinted in the next edition. But definitely you can mail it in that particular book where it has been given so as to bring to the notice. Okay. So in the book itself, the contact details are also there. So you can just give the printing errors or some of the errors which you would have found out. So that it can be corrected in the next edition. With that, students, I'll see you tomorrow. I'll see you on Saturday on this revision lectures that we are conducting. Fine, students. The revision lectures which we are conducting, we are going to meet up now on the Saturday at 6 p.m. See you then, students. Up till then. And the link of the MCQ and case study lectures, I'm going to give it in the description box. Tomorrow you can find it in the description box of this video. The MCQ and the case study released recently by the ICAI. That is what I'm going to do. Take care. Good night to all of you. See you then.